Hey everyone, we are doing our fifth and final episode in our Colorado Springs mini blitz to get me and you familiar with the Colorado Springs market. So we are doing a deal analysis for a house hack property that Jenny found on the MLS, just to walk through the numbers and what you can expect to see down the Springs for a single family house hack. And so as we wrap up this mini series, we'll be doing more content in the future in the Colorado Springs market. But if you got specific questions, ideas, or things that we glossed over you want to know more about, shoot us an email and we'll definitely make sure we incorporate that in future episodes. And of course, we are starting to do Jenny's going to start doing her weekly deal analyses. If you want to join that email list to see what deals you can see in the Denver market, and this will be a property that she'll grab a few properties once a week, plug in the spreadsheet, send out an email with commentary, why she likes it, what's the value add play there, what's the rental play. Email me and we'll get you on that email list. So Jenny, I'm glad to have you back on this episode.
Thanks for having me.
So walk us through this house hack and why you liked it.
Yeah. So basically this property grabbed my attention mainly because the way that the listing was very well written. It mentioned the fact that it already had a kitchenette and a second entrance to it. So
it's one of those house hack properties.
Yeah.
You like those.
So it kind of, rang a few bells that this would be a prime house hacking opportunity. It would be an easy conversion to a fully separated living space doing it this way.
When you say easily conversion, what do you mean? Like, when you mean like through zoning and legal, or just for like from the investor standpoint?
So it's already zoned appropriately for it to be converted into a duplex.
Okay.
It's zoned R4, which would allow for a multifamily property. So a duplex would not be an issue for that. So we could just partition off that second living area, and then the investor would have a duplex.
Really?
Mm-hmm.
Okay. And then this property you found in the MLS, right?
That's correct.
Okay. So let's go through the more details on here. What's the layout of the place and all that good stuff?
Sure. So it's currently set up as a 3-bed, 2-bath, about 1,500 square feet. If we were to do the duplex conversion, it would be 2-bed, 1-bath, and a 1-bed, 1-bath.
And this is like a ranch style home with a basement and then main floor, or what's the layout like?
The way I could see from the photos, it actually appeared to all be ranch style with a little step down that's where you would partition it off.
So like when you enter, it's a split level where you enter, there's a walkway and there's like 3 steps down and 3 steps up type thing?
On the back end, yes.
Oh, so there's a front entrance for
one unit.
Mm-hmm. And then the back entrance would be for a separate unit.
Correct.
Oh, okay.
At least that's what I could maneuver from the photos.
Yeah,
but yeah.
We know how that goes.
Yeah.
Like you can only tell so much from the photos on there.
Exactly. So it was listed for $315,000. It was located in central Colorado Springs. It's very close to downtown. And the reason why we liked it is due to the location, very attractive to tenants, zoned R4, so there's a lot of opportunity there. And the fact that it already had a built-in kitchenette and a separate entrance, it was kind of gearing itself up to be house hacked, in my opinion.
And when you say kitchen, you mean just kind of everything but a range?
Correct.
Okay.
Mm-hmm.
Yeah. And read the public description remarks so we can hear about the property.
Definitely. So it's a remodeled turn-of-the-century home with a fresh and modern look that can be used as a single-family home or a duplex. The property is zoned R4, which adds great possibilities for an investment and additional income. Highly desirable location, just a few blocks from the center of downtown Colorado Springs. Lots of entertainment, restaurants, shopping, parks, and much more. This property features an updated kitchen, dining area, 3/4 bath, and 2 bedrooms, plus an additional living space with 1 bedroom, 1 full bath, a kitchenette, and a separate entrance that would allow for the new owner to use this part of the house as a rental, with a new roof, upgraded vinyl windows, new flooring, new kitchen, new appliances, upgraded electric panel, gas stoves on main level and lower level.
You're right. That is a very good description.
Yeah.
Hats off to the agent for doing a good one.
Mm-hmm.
So, random question here for you because, interesting play there with the conversion to a duplex.
Mm-hmm.
So a couple questions on here. Would this make sense for an investor play, just not a house hack, but it's a straight investor where, hey, buy it, convert it to duplex, we're not that way? Or have you ran the numbers that way?
I haven't run the numbers that way, just kind of eyeballing it. I think it would be okay. would not be a bad idea. I'd have to look into it a little bit more, but I think for a house hack, this would be even better because of the only having to put about 5% down.
Oh, yeah.
Mm-hmm.
Especially if it's that good location. I mean, while you're living there, you don't need to convert to duplex. Just live in one side or live in the kitchenette area and rent out the other side, and you'll probably have a good chunk of your mortgage paid for, right?
Mm-hmm.
And have you or any investors that have like done these types of conversions? Like how is, I guess it's all like through El Paso County, all the permits. Is
Permitting.
that how on the spectrum? How are they the worst, the not good, the good? Like how are they to work with, or do you know?
We've had some experience with them. Usually, if you call them enough times, they will be helpful. So, I mean, that's probably a good vote of confidence for a city board like that.
Okay.
Yeah.
And then let's go into the rental analysis here. And again, we're just doing what we normally do. We're taking the numbers, plug it into the spreadsheet. We will read the numbers. If you want to see them yourself, click the show notes, and we'll have them in the blog post. So walk us through the spreadsheet, Jenny.
Sure. So as we mentioned, we're going to go ahead and write it as a 2-unit property with a down payment percentage of 5% because we're assuming that this is a house hack, the owner-occupied property. And we're going to go ahead and just assume a $315,000 purchase price with about $5,000 of acquisition costs because we're going into it as a single-family home in this situation. And then the initial repair costs, I budgeted about $10,000, and that would just be to legally partition off that one area and to add a range.
Okay.
Mm-hmm. And then the mortgage interest rate, 3%, because, again, this is an owner-occupied home for 30-year fixed.
Yeah, and I mean, believe it or not, we got a property contract a couple of days ago in Denver up here. We just sat down with our client. He just happened to be in the office meeting with Joe for some lending, and we ran into him, and he got his at 2.5%.
Wow.
He bought the rate down some, but 2.5%. So
that's fantastic.
Yeah, what we're seeing right now for house hacks, anywhere from now 2.5, anywhere from 2.5 to low 3. So it's amazing. And so you've got the mortgage insurance as monthly paid, just to highlight that because that will obviously impact cash flow when we go to the next slide. What about for operating expenses? And let me ask, sorry, one more thing. You underwrote this as while they're living there or as a future rental for when they move out?
Future rental for when they move out, but also giving them just a glimpse. You can kind of mix and match which features you want to do now. Do you want to convert it while you're living there? Do you want to rent out half of it? What do you want to do, sort of thing.
Okay.
So what I did is I assumed they went ahead and partitioned it out after they've moved out. So unit 1 would rent for about $1,100 a month.
And that's the 2-1?
The 2-1. And then unit 2 would rent for about $900 a month. And I did want to mention that's very low in my opinion. I think that you could get about 150 more per unit.
Oh, okay. And were these existing rentals there, or these are just conservative rental comps you pulled?
Conservative rental comps.
Okay.
Just based on the location, and the home is really beautiful, I think that you could get a very good tenant in there.
So you have a total income at $2,000.
Mm-hmm.
If you rented this as just a whole house, one tenant, I guess, probably to a family, what's the going rate for like a 3-2 in this part of town?
In that part of town, you could probably get it for about $1,700.
Okay.
Mm-hmm.
So you're getting a significant rent bump by separating them out.
Mm-hmm.
And you expected you said probably get an extra like $100 per unit, you thought?
I think so.
Okay.
Mm-hmm.
So we're underwriting at $2,000, but more, but the range will be like $2,000 to $2,200 is what you expect?
Maybe even $2,300.
Really? Okay.
Mm-hmm.
Great. So $2,000, $2,300. Vacancy 3%, you have that variable in here. And what about for operating expenses?
So we went ahead and did the standard 10% property management, 8% reserves for maintenance, and then something I just wanted to point out, as we saw in the description, the seller has upgraded a substantial portion of the house. So I would expect that in reality to be much lower for the first several years.
Yep.
And then real estate taxes, I put $1,105, which is based on the assessment. And then property insurance, I wasn't quite sure what it would be in this situation, so I went ahead and bumped it up a lot to $1,500, which would more than cover your cost for insurance.
Okay. For doing like the duplex style?
Mm-hmm.
Okay.
And then I went ahead and assumed a utility bill back because you have a fresh start, so you can go ahead and start that with your tenants. and then just a $500 a year landscaping budget.
Okay. And for the results here.
So it's about break even.
Mm-hmm. So you've got, the spreadsheet shows a negative 572. And so, I mean, as I always say, if it's between negative 100 to 1,000, that's break even. I mean, give or take a few bucks one way or the other.
Yeah.
So a couple things that I think is always good to talk about on house hack properties is if you got the higher rents you mentioned, you would definitely be positive cash flow. Depending on where your mortgage insurance comes in at, because the spreadsheet's auto-calculating at about $107 per month. So if your mortgage insurance comes in lower or you prepay it, that might put you at the 0 to positive number. So there's definitely a few things we put on there. Or if you plugged in a lower interest rate, you probably bump up quite a few bucks too in rents or cash flow as well. So break even. Oh, go ahead.
Oh, I was just going to say a house hacker might be more inclined to property manage themselves as well to learn that part of the business.
Yeah, so what we're seeing on here with the current numbers as is a negative 1.8% cash-on-cash return and a 4.9% cap rate. Obviously, if we get higher rents and all that, what we just talked about, all those numbers will go up. But I mean, you know, it sounds like Colorado Springs is similar to Denver. If you're putting 5% down, you're not getting rich off the cash flow, right? Yeah, it's just it's a long-term play.
Exactly.
And what are your final thoughts on this property?
So, I mean, if you think about only putting 5% down on a $315,000 asset that is in a very appreciating part of the Springs, I mean, and being able to conservatively assume a break-even cash flow, in reality, you would probably cash flow a few $1,000s a year. I think this is a really good opportunity, especially since we mentioned that a lot of the CapEx items have already been taken care of by the seller. So that in and of itself is a good way to be able to realize more cash flow on that.
And in terms of, you know, what happens a lot here in Denver is a lot of people want to go out there and buy a duplex or a fourplex house hack. And I mean, we talked about this, you know, off the podcast. You know, up here in Denver, it's, you know, looks great on a Bigger Pockets blog post, a little harder to do in reality. And a lot of times people end up going towards a single family home. Is the scene in the Springs similar with a low inventory of multis, or do you see a better opportunity to like house hack multis in the Springs, or is it kind of like similar stuff to what we see in Denver?
I see it as similar.
Okay.
I think you have to be creative.
Yeah. Okay. Good to know. Awesome. Well, we will wrap up this, and everyone, thank you for listening. This is our 5th and final in our mini Colorado Springs Blitz podcast series. So give us feedback. Let us know what you want to hear, learn about. We will be doing more podcasts in the future as we get feedback on here and let these get out there. And of course, if you want to join Jenny's email list to start seeing what Colorado Springs deals look like, email me and I'll get you set up on there. Jenny, thank you so much.
Thank you.